look, I think NVIDIA is a really interesting place to start. NVIDIA has just been on a tear. People are so excited. I, for one, I know you are as well, very, very excited about all that can be. Gosh, I feel like Kamala, I'm burned by all that can be. It's kind of a strange thing to say, but all that's coming, right, within the tech sector, because it's just enormous, these changes, and they're going to have massive, massive ripple effects on so many different things in so many different industries. NVIDIA has these enormous profit margins because it's sort of, the only game in town right now, but that's changing, that's shifting. So when we look at, for example, our American Resilience portfolio, and by the way, guys, if you're watching this live, we do have 76 Research there on the bottom of the screen. I just added it to the chat as well. So 76research.com, that's the company, or go to 76report.com. If you use code word dollar, DOLLAR, you can sign up. It's just $1 a month. So, hey, no harm, no foul. And you can get this research for the first couple of months. It goes to $9.95 thereafter, but the introductory rate is $1 a month with code word dollar. Go and sign up, 76report.com or 76research.com, and get this. But one of the things that we try and do, certainly within the model portfolios, is say, okay, you know what, if you're in NVIDIA, and you probably are if you're in an S&P 500 index, which is a good place to start, by the way, if you're just getting started investing, you are going to have exposure to NVIDIA, maybe more than you want, right? Because these Mag 7 that are very dominant within the S&P give you a lot of volatility. So we've tried to kind of look outside that space to say, okay, we believe in this. We do believe there's fundamental change coming, and there will be so many beneficiaries. So who are the beneficiaries that are a little less affected by, maybe compressed margins that eventually, as there's more competition within the tech space, within the semiconductor space, that NVIDIA is going to feel?
Yeah, and NVIDIA, it's actually, I think, more or less back to its highs after a very volatile August. The tech sector, the market as a whole, just sort of roaring back here with the Fed action. But NVIDIA reports, I believe, next week. That'll be very interesting, not just for NVIDIA, but for market sentiment as a whole. Will they kind of beat the high estimates that are already out there? Trish, I think the other day you kind of, I missed it at the time. I think you were trying to get me to talk about Digital Realty, which is a holding that we have within our model portfolios and have written about. And I think that's an interesting one to kind of put in this context of
okay. So
what's
let's
going
back
on.
up for a second.
Yeah.
So if we're talking about, we want an AI play that is not NVIDIA, right? Because NVIDIA is volatile and NVIDIA has enormous profit margins, which one has to think theoretically will come down in time, et cetera. So if you love the AI space, but you don't want to be in NVIDIA or don't want to be just directly in semis, there's an alternative, and it's Digital Realty.
Yeah, and one thing so Digital Realty, they own the data centers. They own many, like some 300 data centers, and they partner with the hyperscalers, and that's where the NVIDIA powered products, the servers, are located, right? So they're like kind of the physical premises for all of these AI servers. And I think what's kind of interesting is, we've been talking about the idea of an AI bubble, and not just us, but the industry as a whole, and the idea that the hyperscalers, the Mag 7, are over investing in AI, they're buying too many, or the idea that NVIDIA's profit margins and its profitability isn't sustainable because there'll be competition. And what I kind of think about that is that actually does create opportunities. Like if we relate it to what happened in the late 90s when all of that fiber capacity was overbuilt, that was really bad for the investors in the fiber companies, but it was good for the customers of the fiber companies, which were like internet service providers and the rest of the internet ecosystem, right? So, if you think about a situation where NVIDIA actually can't sustain its profitability and its margins, and there is kind of a bubble in NVIDIA, that could actually accrue to the benefit of other players within, the AI space, because, NVIDIA is really taking a lot of the profit pool. And if you lower costs and you lower the price of NVIDIA chips, or just chips in general for data centers and for AI purposes that frees up budgets and allows for a lot more investment and a lot more AI. So, I think they're not all, you shouldn't think of them all as just sort of being like aligned with the same patterns and trends. You can really pick your spots, and to some extent, if there is overinvestment in AI or excess profitability at a stock like NVIDIA, and that unwinds over time, there could be other stocks that would benefit. And I think, there'd be more investment in data centers if GPUs became commoditized and got cheaper. So I like how DLR, Digital Realty, is positioned. Also they have these sort of like longer term contracts, so it's a more stable kind of contractual recurring business model versus say a chip manufacturer.
Yeah, and actually, I would just point out in the American resilience portfolio, there's other plays like Digital Realty. So people should go there, go check it out. Again, you can get 76 Report. Go to 76report.com, use code word dollar, DOLLAR, and you're going to get a lot there. But the real key really is those more model portfolios. I'm just laughing because I'm glad Douglas says he is very happy with his income portfolio from 76 Research. I'm glad to hear that. The income portfolio is really designed to be something very steady for folks. And, granted, we are doing the best job we can here. I happen to have gotten myself paired with probably the most brilliant stock picker out there. So I consider myself very lucky, and therefore you guys very lucky to be able to have access to someone like Rob. But the whole idea behind, say, something like an income builder portfolio is really, it's designed to be steady Eddie, but provide you a little bit of income in your retirement, and different slightly than, say, the American Resilience portfolio, which is looking for more of those tech plays that are maybe just outside the normal scope that you would get in, say, an S&P 500.
Yep. Although we have some growthier names within the income builder. So with the income builder portfolio, the average dividend yield at this moment is around 4%. So significantly higher versus the broader market, which is like closer to 1%. And what we really, we try to find like the best opportunities, specifically in terms of the income builder, with sort of a higher dividend paying stocks across sectors. So really cherry picking the best ideas and giving you some, sector diversification as well.
Yeah. No,
and that's true across the different strategies.